Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello and welcome to another podcast in the Larking Gowen Insights series. Today I am joined by Gillian McGill, our VAT Director, and I'm Dominic Carter, Tax Partner at Larking Gowen. And Gilly, we enjoyed our previous experience of doing a podcast following the budget on the subject of fiscal drag so much that we thought we'd like to have another go, didn't we? But
yes.
Pleased to say in this case, whilst you were lamenting the lack of changes to the VAT regime announced in the budget, we do have some very topical VAT aspects to this discussion, as well as generally topical matters as a result of some of the things which have recently been in the public domain and in the media on the subject of tax-related penalties.
Yeah, it's been quite a giddy time to work in tax. We're not normally front of national newspapers, so we're just enjoying the sunshine whilst it shines its beams on us. And as you say, Dominic, the thing that's been particularly noticeable within the VAT tax system is this introduction of a brand new penalty regime, which came in for returns which were filed on or after the 1st of January 2023. So we really are at the waking dawn of the whole new regime. Part of the reason why that regime had to be introduced is because the previous regime that we had, which was very much an inflexible system, and it charged penalties for late returns and late VAT payments based on a percentage basis of the outstanding tax, and didn't really take account of things like how late you were. So we had situations where people were perhaps only one day late submitting their VAT return, but nevertheless were subject to quite, a punitive, large penalty, and that had been challenged through the courts, partly in response to those challenges and also the desire from HM Revenue and Customs to try to bring VAT penalties more in line with other taxes. We now have this new system, which, as I say, came into effect on the 1st of January.
That sounds very interesting, Julie, and it sounds like it should work better than the previous system. Can you explain how it works in practice?
Yeah, it should work better, I think. It's a relatively simple system in that you get points, and when you reach points, a certain points threshold for either submitting your return late or paying your VAT late, you then get a penalty. And the amount of that penalty for submitting your return late is a fixed amount. So it doesn't matter whether the return is, showing £500,000 of VAT due to HMRC or is showing a repayment due to you, you will still get a penalty. So that's a big change from what we had in the past. Repayment returns in the past didn't get any kind of penalty at all, no matter how late they were. You just didn't get your VAT back. But now this is a way to try and encourage people to really improve their compliance and to take their filing obligations seriously, I think, regardless of whether there's any tax due to HMRC or not.
Oh, that sounds really, it does sound like a sea change, like you say.
Yeah.
I guess for me, in a predominantly corporation tax environment, we're used to the fact that to achieve to suffer from a significant size penalty, that's always going to be because there is a substantial amount of tax to pay, and you're going to end up paying a percentage of it on a tax geared basis. But this sounds like it, could be quite punitive, if you like, for situations where there isn't actually tax at stake, or if there is, it's actually tax that's payable back to the taxpayer.
Exactly. Yeah, exactly. But don't forget, Dominic, that this is only the penalty regime for VAT compliance. As you mentioned, we still do have also a penalty regime which applies more widely across the taxes for errors. And you'll be familiar with how that works. It's the same for corporation tax, income tax, IHT, CGT and VAT. If you get your tax wrong, don't pay the right amount at the right time, there will be a penalty that HMRC will levy on you.
So this is the sort of thing that my clients and I will be familiar with in terms of corporation tax, where we've got certain levels of penalty calculated as a percentage of the unpaid tax resulting from the error. So in the corporation tax world, we have, well, first of all, we only have the risk of a penalty to our clients in the event that they haven't shown due care in their tax filings. But if there has been carelessness involved, they could expect a penalty of somewhere between 0% and 30% of the amount
That's
of
right.
tax at stake. And then for the more serious errors, those that are deliberate, or worse still, deliberate and concealed, they might have 30 to 70 to 100% of the tax levied as a penalty. Although I think fair to say that for a firm of accountants like ourselves, with the clients that we're dealing with, the worst it should ever get is a degree of carelessness, and we'd generally be hoping that we and our clients will be making all necessary steps to absolutely minimize the amount of penalties that are levied.
Yeah, agreed. And we have the same for all the taxes, I think, Dominic. But what's really interesting to me is that HMRC actually explicitly says on their website that if you take reasonable care to get things right, but your tax is still inaccurate, we will not charge you a penalty. It's quite a clear statement of intent. But obviously, the term reasonable care is a bit open to interpretation, perhaps.
I think it is, because I know, like me, you were around when these rules came into being some years
Yes,
ago. I needn't specify
we were
exactly when,
mere
but
babes at the time.
that was the sea change at the time, wasn't it? That we moved onto this basis of penalty, and there was a degree of sort of settling down after that, whereby, in our minds, and as HMRC say, there's no penalty if you have taken due care. But the conception of what due care is, and when a taxpayer has been careless, opinions can vary on that between
Yeah,
HMRC and taxpayers, and that's particularly the case when that regime came into being. As I say, it took a while to settle down, and sometimes taxpayers are frustrated because they think that, in HMRC's view, there can be no error if, the fact that there is an error is itself an indication of carelessness. And from sometimes the taxpayers resistant to the idea that whilst they're busy running their business and doing everything that they can, and they've got a third-party accountant helping them, at least on certain taxes, that they haven't been careless, whereas HMRC might see that a different way.
yeah. Also, they do say, and again, this is on their website, it's publicly available, that if you've used a tax advisor, so if a taxpayer has used a tax advisor with the appropriate expertise, so again, a slightly weaselly expression, then HMRC will normally consider that you've taken reasonable care. So there is a bit of a guarantee if you have used a reputable tax advisor, that you're somewhat protected from penalties being levied on you, I think.
And I guess dealing with the taxes that you and I respectively deal with, Julie, it's slightly different, isn't it? Because most of our clients for which we act will use us to prepare their corporation tax returns, for example. In our personal tax team, most taxpayers will use a firm of accountants to deal with their personal tax returns. I'm talking about clients that have got relatively complex tax
Yeah.
affairs, or at least they're on business in their own account, or operating through a company. But in your field of VAT, much of the routine
Yeah.
month to month quarter-to-quarter activity is in-house by the company, isn't it?
Yeah.
So how do you find HMRC approach that sort of situation when there are
It's
errors?
tricky, and I think it's really open to a little bit of interpretation here, because as you say, VAT is a live transaction tax. So a decision is made on the liability of a transaction at every moment that income is generated, which might be, thousands, tens of thousands of times a day, depending on the size of the business. And obviously, there's therefore much more scope for it to go wrong, as well as the fact, as you say, the majority of businesses prepare their own VAT returns. So they've not outsourced and bought in that tax expertise that HMRC says protects you from penalties.
And I guess it's exactly the same, or in many cases exactly the same, in terms of payroll taxes, PAYE and national insurance. And these are also areas that are very commonly dealt with in-house. I mean, we, like other accountants, offer a payroll service as we offer a VAT compliance service, but many of our clients will be large enough to have those systems in-house, or will choose to deal with those in-house. And they are dealing with them in both cases in real time, aren't they?
Yeah.
I guess one of the things that interests me is how we deal with things when they go wrong, when there has been an error. And one of the things that often comes up where there is, and let's say for a moment HMRC have been successful in demonstrating that there has been some degree of carelessness, and we've been unable to demonstrate that otherwise than that. So what we end up moving on to is a discussion around what penalties might be and how we can hopefully enable HMRC to apply a low or a nil penalty.
Yeah.
Now, one of the areas that we come across a lot is perhaps an error is made. Sometimes it might happen when we've picked up a new client, are acting for a taxpayer for the first time. I'd like to think it's because we operate to a higher standard, but it might simply be a fresh pair of eyes on the same issue.
Yeah.
And we spot something that's wrong. One of the things that we're always keen to emphasize is the benefit of making unprompted disclosure to HMRC at that point. So we'd actually explain to our client that it would be a good thing for them to bring that to HMRC's attention. And generally we'd do that because we would hope that that would play out well for them in terms of, yes, you will have the additional tax to pay, but that was due anyway. You may well have some statutory interest that will apply anyway because you've had the benefit of that cash, but the penalty is the real real cost, isn't it? And the one that we're keen to avoid. I don't know what your experience is, but one of the things that I've found recently with HMRC is that they really will attach weight to this point of unprompted disclosure in terms of, I suppose it gives them a positive view on taxpayer behaviour, that they've actually wanted to make complete and accurate disclosure and they've been cooperative in doing so. But in addition to that, one of the things that HMRC inspectors have been keen to impress on us is that they are, to an extent, limited by these rules that we have for taxes. And it can be very, well, even should they wish to do so, it's very difficult for them to apply a zero penalty in a case of carelessness where there hasn't been unprompted disclosure.
And I always find this a little tricky, or it can be, certainly in my experience, where, and this has been the case on a number of occasions, a client has spoken to me and we've deduced that things are not right and there is an error somewhere within their VAT reporting. But it's going to take us some time to actually accurately calculate what the extent of that error is. And at what point in that sort of timeline are we going to be at risk of being in the unprompted disclosure point should HMRC, happen to lift the phone to us and say they want to look at things? And the approach I have taken in the past, when I know that it's going to take us a number of months, so it will be, 2 or 3 more VAT returns will be filed before we actually can properly quantify the error and say how it's arisen, is to write to HMRC and say, we're looking at this, we know there's a problem, we don't know how much it is yet, here's what we're doing to try and work it out, and we will get back to you by X date. And at least then you have not made a full disclosure of an error, and there's no doubt about that because you need to quantify it to make a disclosure, but you have at least helped HMRC along the way to giving you that full relief of any penalties, as you say, Dominic, by being completely open with them and unprompted.
Well, that sounds like a really good practical solution in those circumstances, Gilly, and I think that's why I might be recommending to my clients as well if they find themselves in that sort of position. But it really does help, doesn't it? Because the last thing you want to do is to actually present something to HMRC when you're aware that there's been an error made, that you're still not 100%, and the taxpayer, your client, is also not 100% sure about, because they haven't had the time to carry out the necessary review to work out what it is that they need to disclose. So that sounds like a really practical way forward in those circumstances. Just thinking about other areas that we've had experience of recently, I think my other one, which I thought notable, was in those circumstances where perhaps we're not able to secure a nil penalty, perhaps even in those circumstances to which I alluded, whereby HMRC have prompted the error, prompted the disclosure. It's not automatic that a taxpayer, a client, is going to know that they've made an error. They've overlooked it in the first place. They may not pick up on it. There may be no process there that would cause them to look at it, or maybe they're not at the sort of interval whereby they're preparing the next return of the same kind, where they might go look back and see an error in the previous filing. And under those circumstances, we have recently had cases where HMRC have been willing to suspend a penalty.
Yes.
A colleague of mine actually said it's a bit like a suspended prison sentence, isn't it? In the sense that if you behave well for a certain period of time, it will work out well for you. But if you don't, it won't.
The full weight of the law will come crashing down upon you.
It's a frivolous analogy, but it is true, isn't
it?
Because in these cases, what HMRC will do is allow a suspension period whereby they won't actually apply the penalty, require you to pay the penalty, but on the basis that you will agree with them certain conditions that should help ensure that no similar error is made over the suspension period, and that's up for agreement as well, isn't it? What that appropriate period would be to allow that to play out. But the penalty won't come into charge. But as you say, if there are further infringements in that period and the conditions aren't met, that penalty will be payable at that point. And that is a concept that I've found quite both interesting and helpful, but sometimes not helpful, because it does require things like there to be a realistic prospect of, there's a period of time for which that can be tested. And in cases where the business has ceased, for example, or is no longer doing the type of activities that gave rise to the error in the first place, that's not always possible.
There is a real skill, I guess, in negotiating the conditions for suspension of penalties. As one would expect, HMRC will probably go in with quite a high bar before they'll suspend, and seek to apply the conditions across all taxes and all filings and payments that conceivably the taxpayer will be responsible for. Whereas you can often, and I'm sure you found this too, Dominic, you can often negotiate those conditions to be a bit more focused on actually the behaviour that resulted in that error in the first place. And as you say, then you're reliant upon the business then putting in place the appropriate checks and balances to make sure that they can comply with those conditions. But yeah, it was one of the highlights, I guess, of the new penalty regime when it came in. This concept of suspension of penalties, it was quite new and exciting at the time.
Yes, everything which appeared groundbreaking and different at the time, but now we're actually quite used to, and
Yeah.
so are HMRC in many cases, so are our clients, and so are the tribunals, the tax tribunals as well, aren't they? So
Yes.
I imagine with your changes to the VAT compliance penalty regime, there may be a period a little bit like what we went through with all of these concepts, where they have to be tested to a degree before the whole thing settles down and you have a degree of
Undoubtedly.
predictability.
Yeah. And what will also be interesting, also it's not new as such, but to see how HMRC really take forward the concept of applying penalties for errors when they're not disclosed to them, and how that
Yes.
actually interacts with the ability that a business has to make adjustments within its VAT return for errors. And that's never
Yes.
really sort of been tested, not yet. I'm sure it will be in due course, but it's a fine line, I think, to tread. If you're not going to tell HMRC you've made an adjustment within your VAT return, and even where it's within the parameters that allows you to do so, they could at a later date say that that was not disclosed to them. It wasn't wasn't an unprompted disclosure of an error, because of course they wouldn't see it. It'd just be in the
So you've
boxes
actually
fine.
corrected the error, you've done everything, the new return's supplanted the old
Yeah.
return, and in your mind, as an advisor, in the taxpayer's mind, that's all dealt with. But HMRC could technically say, well, actually, that wasn't unprompted disclosure. What would you suggest then, Gilly? Would you write to HMRC and explain grounds for the...
Well, as you know, favourite answer to any question involving taxes, it depends. And it does depend in this case, I think, because HMRC has said that they don't expect taxpayers to get everything perfectly right all of the time. Hence why you can make these small adjustments in your VAT return for errors up to £10,000. But I would say that unless we're really happy that that adjustment was not careless, that it's probably wise to still write to HMRC anyway and tell them that the adjustment has been made, but it's been processed already through your VAT return. So it depends on the circumstances, I guess.
That sounds really helpful, Julie. I think just reflecting on our conversation, I think there have been a number of really useful points there of real practical relevance, haven't they? And I guess we approach this from different points of view, because most of what we do, we're heavily involved in the production of the relevant returns.
Yeah.
Often what you're picking up, you're only being consulted in your area of expertise where there's something large or which the taxpayer recognises large, unusual, or somehow non-routine. But I think we've come away from this, or I certainly have, with a number of good practical points that I can bear in mind going forward around penalties, mitigate, how to take care, how HMRC might perceive things from their side of the fence, how we can help our clients comply, and how we can take every step, if we do correct something, to try and make sure that that lands correctly with HMRC and they see it for what it is and are able to apply a treatment which hopefully doesn't end up with penalties for our clients.
Yeah, it's been a pleasure as always, Dominic.
Likewise, Gilly. Thank you very much for that discussion.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.